Do you see the chat?
Yes,
Okay.
I've seen it.
Okay, so today is very simple. Okay, we'll go through lot size, leverage, margin, equity, margin level percentage, take profit, stop loss, other types of pending orders, limits, stop orders, and market executions. Market participants, forex trading session overlaps. You get it. So today is very simple as our first meeting. All these things, majority of people when they start, they will just go and learn support and resistance. You get it. But as a trader, you have to know all those things. You get it.
Yeah.
Yes. So it's very important. So as we are about to start now, so when you say lot size or leverage or margin, what does it come to your mind?
So
in terms of trading,
when we talk about lot size, I mean it's the percentage you are risking on your account. Like if you choose 0.01 as your lot size, it means that you are losing 1% of your trading account. Right, that is what I know about lot sizes. So the minimum lot size we have is 0.01, and then up to whatever you want to. And so 0.01 is you risking 1% of your account to either make 2 or 3 profits. That is what I know about lot size.
So in forex trading, okay, a lot size is a standard unit of measurement that determines the volume of a trade. You get it? So because currency price movement is pip, okay, it's so small. So you need to trade a large quantity to make a meaningful profit or loss. You get it? So the lot size you can choose directly affect. Lot size you choose directly affect how much money you're going to make or lose for every pip that price move. I mean, you know pip, right?
Yeah.
So it's going to affect any price movement either in your favor or when it go against you.
Okay.
So we have 4 types of lot size, but most brokers don't bring the last 4, the 4th one. Guesses. So most of the time it's only 2. It's only 3. Sorry, it's only 3, and these are the standard lot size. And then I'm coming. Let me type it. Standard. And we have the mini lots. We have the micro. Okay, so we have basically now this is what most of the time we use. You get it? So This is what we have the standard, and this one is equivalent to 100,000 units. You get it?
Okay.
So this is how it actually works. So this is 100 standard lot is the 100,000 units. You get it?
Yeah.
So let's say you are trading, okay? So that unit is the base currency. I mean, you know base currency. Currency.
Yes.
Yes. So it's the 100 units of the base currency. So this is the largest lot size, and it's typically used by professional traders or institutions, or as maybe if you become more profitable and you have large amount of money. Yes, you can use that. I use that when I want to. I mean, let's say if I've paid small amount of money, maybe $50 up to $1,000, then I'm going to use maximum lot size, like standard lot size, for it.
Okay.
So basically, standard lot size is one lot. It's one lot. It's one lot. You get it? And so in this case like this, every movement, one pip is equals to $10. You get it?
Oh, okay. Yeah.
For every movement that the market, one pip that either you are trading GBP, USD or gold, you get it? Any pip movement that the market will move is equivalent to $10 when you enter this lot. So basically, that means if you have $100, the market have to move how many? The market movement move 10 pips. Actually, you are in loss. Your account is gone.
Yeah.
You get it?
Yeah.
So that's how the standard lot size is. That's very, very simple analogy that I've given. Do you understand?
Yeah, I understand. So can I ask a question?
Okay, ask question. Ask question.
Yeah, so it means that if you are using this standard lot,
okay,
and maybe you said the standard lot is equal to one lot like this. So it means that one lot means any trade you take is equivalent to 10. Any movement of
any
pip, like movement. One pip is $10.
Yes. So let's say
$10.
Let's say the market move. Let's say euro USD move 25 pips. 25 pips. 25 pips. That means $10. $10
times 25 pips.
Yes. Times 25 pips.
Then we are getting like 250 pips. Yes. $250 pips.
You get $250 because you are timesing the value, the currency value to the distance. You get it?
Yeah.
So that's how it works.
Okay.
That's how it works.
Okay.
So that's how it works. Do you understand?
Yeah, I understand.
Okay. So we are going to the mini lot. So based on what I've said, how can you define or like give example or like something about these two, the micro, the mini, and the macro, micro?
The mini and the micro.
Yeah. How do you, based on how I explain this, how will you, explain this one to the macro and then this thing?
Okay. So if the standard lot is one, when it moves one pip, it's $10. Then I think mini lots, when it moves one pip, it is $1.
Yes, that's good. That's good. That's it. Because this is the 1/10 of that 100 units. You get it?
Yeah.
And this one is 1/10 of mini lots.
Okay.
Yes. So that's it. That's what you get the concept. That's it. So the same like this one, you have to like the lot is, you get it. The same like mini lots. Yeah. So, or I should give an example. What's an example, or we should go to the next one?
Yeah, we can go to the next one.
Okay. So that's it. That's it. So this one is, I mean, 1/10 of this. You get it? And the same thing applies to this one. So basically, maybe your friend will look, watch it. So you can find lot size at in your distance when you are placing a trade. You get it?
Okay.
Let's say in MT5 you can find it. I don't know. Have you? I don't know. You guys cannot say it. But you guys can learn about MT5 and this thing. You get it?
Yeah, we have to speak. I'm conversant with the interface when it comes to the phone.
Okay.
Yeah. So all that you are showing, I've seen it and I know about that.
Okay. So we are going the next one.
Leverage.
The leverage. So when you say leverage, how do you, in terms of trading wise, how do you understand?
Okay.
I hope I'm not worrying you, because at the end of the day, you have to be profitable. Yeah, so I hope I'm not worrying you. Yeah, it's more than school, I swear. More than school. At the end of the day, because every mistake that you'll be doing, you are paying with dollars. Your own money.
Yeah.
Yes. So I have to make sure everything is in place.
Okay. So I think with the leverage, I don't know the exact definition for it, but I can give a scenario.
Okay, give a scenario. Give a scenario.
So when we say a leverage, you can choose a leverage like, let's say 1:500, which means that any amount you will deposit into your trading account is going to be multiplied by the 500, and that will be the maximum amount you can trade with.
Okay. Okay. So I think that's it.
Yeah, that is the little knowledge I have.
Okay. So the leverage is a tool that allows you to control a much larger trading position than the amount of money that you have in your account. You get it? So think of it like it's a loan from your broker. Let's say it like that way. And it's expressed as ratio, like the way you said, like 500 is to 1, 50 is to 1, 100 is to 1. You get it?
Yeah.
So that's how leverage.
So this one, does it apply to only demo accounts or real accounts too? There's
real
leverage.
Account, leverage is applied. Leverage is also part. And you can find leverage in your brokerage platform. You get it?
Okay. Yeah.
You are using Xness?
Yes.
So you can find it there. I think I have to get time so that we'll go all those things, or you guys can do it yourself.
Yeah, you have to find time and help us with that.
Yeah.
Yeah. Then so to you, what is the suitable leverage a beginner should go in for?
For me, because of the capital, this thing, my amount is very small. You get it? So
Yeah.
normally you see me trading small accounts. You get it? So
Yeah.
because I go for high leverage, you get it? I go for high leverage. So when you get to some level, I can enter high lot size.
Oh, okay.
Yes. So basically, the leverage, how it works is if you have an account of $1,000, you get it, and your broker offers you 100 is to 1 leverage. You can control the trade with 100,000 because your 100 is to 1. That means 100 times your amount, $1,000. You get me?
Yeah.
When your broker give you this 100 is to 1. You get it? That means the broker has given you that you can control amount of money of 100 times your $1,000 account. That means equivalent to what? It's equivalent to 100,000.
Oh, okay.
You get it? In your account.
Yeah.
If you have, yes. If you have that $1,000 in your account, this is the amount that you can have access to. So like every dollar that you put down, depending on the leverage that you choose, your broker lend you money. You get it? In order for you to access it, because the way the market is, let's say if you choose small amount of leverage, they will limit you in terms of lot size, some of the lot size. You get it?
Yeah.
This one, you can enter how many lot size? Your maximum lot size is going to be 1 lot because this is 100,000 units.
Yeah.
You get it? So if you choose high leverage, the higher the leverage, the higher your lot size. If you choose small lot size, your leverage is going to be limit. Your lot size is going to be limit. If you choose lower leverage, your lot size is going to be limit. You get it? You enter a position and they will say you don't have enough money, or like it will never even execute. You get it?
Okay.
Yeah, so the leverage allow you to get much more profit, and also at the end of the day too, it can double swell you, hedge you, like in terms of loss size, losses. When the trade go against you, you lose at the same time.
Okay.
You get it? So
okay, I got it.
Yeah, that's how it's actually worked. Yes. Do you understand?
Yes, please, I do.
Okay. So we are going to the margin. Leverage. The leverage, when you go to your brokerage, you can brokerage this thing, you can find it there. If you go to Xness, you can. So that's where you settle. You go there and do every settings there. You get it?
Okay.
Before, you can even come to your MT5 and start trading.
Okay.
Yeah, so we are going to the margin. So the margin, to how do you understand the margin?
Margin, the truth be told, I don't know what is called margin, but sometimes because I've taken few trades in my demo account.
Okay.
Sometimes when you take the trade, you will see that you will see equity, you will see margin, and all of
Yes.
that in that order.
Yes.
But margin particularly, I don't know what it entails.
Okay. Let me do this scenario. Okay. Let's say you need to buy. You don't need to buy a entire car. Okay. So you just need to rent
Okay.
for a period of time. Okay. Let's say we
Okay.
get some money and then, oh, I call you, Charlie Sippy, where are you? I want to, enjoy life small, but I want to go to, maybe Dubai or something like that. But when you go there, we don't want to buy a car there, so we have to rent a car. Okay.
Okay.
So the rental
Okay.
company will ask for a security deposit. You get so
Okay.
this deposit, that security deposit, is a small amount of money that hold on to make sure that you have enough to pay for any small damage you might cause in terms of taking the car.
Okay.
You get it?
Yeah, I get that.
So you get your money back when you return safely. That's it. You apply the same to trading. Don't forget that the leverage, they give you some money. You get it? So when you use leverage to trade forex, like you are not just paying the full trade value. Okay. Instead, your broker is lending you the extra money to open a large position. Sorry. So based on your this thing, margin. The margin is the amount of money that your broker will lock in terms of you giving you the leverage. You get it?
Yeah.
To trade, so that they will not incur losses. They want to make sure that anything that happens in your account, either you lose or you gain, they are in the safer side. And then the equity and then we have the use margin. Okay, and then we have the free margin. The use margin is the amount of money your broker has demand from you, and then the free margin is the amount of money left in your account after you place the trade.
Okay.
Yes.
Okay.
And then we are coming to the equity. So in the equity, how do you understand it?
Equity. I think it is how much money you currently have. Like maybe if um your account balance plus maybe if you have taken a trade, the profit you get or the loss.
Okay. The
So
equity,
the amount of money.
so the equity is simple means the balance, okay, balance of your account, like the account balance plus your floating loss or profit. You get it?
Okay.
You see that when you place the trade, you see that your equity is being reading, is the one that is reading. And then you see your account, your balance is very stable.
Okay.
So when you enter a trade, so your equity is basically equals to the account balance plus your floating profit or loss.
Okay.
So that's how it is. That's how simple it is. So Yeah, okay. That's the very simple. So if anything that you don't understand, so basically when you go to that, all these things you can find MT5, MT5. You get it? Yeah,
Yeah.
you find it in your MT5. When you place the trade, automatically you see your balance. Your balance is very stable. Unless you close the trade, that your profit or your loss will deduct or add up to your balance. But in that
Okay.
time, you are trading. When you are trading, your equity is always reading, either in profit or loss.
Okay.
Ah. Gabriel, please do you understand?
Yeah. No, I just got into I just logged in, so I didn't get what you guys were talking about, but maybe I'll just back up with the recording.
Oh, okay, okay. So
Mm.
we'll go to the next one. So CP, Abi, you understand this thing, the equity.
Yeah, I understand.
So how can you say equity? Let's say someone, oh, you are a trader. So what's up? Oh, equity, this thing I don't understand. Oh, these things I don't understand. Can you explain what are you going to say in terms of
Okay.
equity?
Okay. So with equity, what I can say is that if if you have a demo account and you have not traded, you have not placed any trade, then equity is your current balance.
It's not, let me be
But
correct.
if
It's
you
not about necessarily the demo. It's not
okay,
no. It's not about only everything here is about life account. You get it?
okay,
Yes, it appears in your life account, your demo account, everything here is applied to everything. You get it? Aha, that's why demo is there for in terms of those things, these things. Please, do you get it?
Yeah.
Yeah, so that's what we are. So the equity is the amount, your balance in your the balance in your account, and then the floating profit or a loss when you enter a trade. Aha. The margin level percentage, I would say, like let's say it determines your healthy of your trading account by comparing your equity to your using margin, to your use margin. You get it? So it express, no, most of the time is percentage, or like let me show you something. Aha. When you guys open the trade, you see that the margin level, there's percentage there. You get it? How most of the
yeah,
time it's in percentage.
yeah,
So the higher the percentage, the healthier your account is. You get it? The more
oh,
the more free margin you have available to open a new trade. You get it? So it actually determines your. That means if you open a trade and then the trade is going against you, your percentage level will go down. Your margin percentage level will be going down. That means for you to enter a trade, another trade, they will not allow you. You get it?
yeah,
So basically, the percentage is the equity divided by the free margin. Abi, we know free margin. The money that they've
yeah,
requested from you times
yeah.
times 100. Yes. So the equity is the real
Okay,
value, your account, including your profits and then losses from open trade. Your loss, or either you are in loss or you are in profit. And then they use margin is the amount of money that the broker have locked to maintain your open position, open trade. So we understand all those things.
they use
You said the use margin is what?
The use margin is the amount that the broker has locked in. I mean, they before you trade the leverage, they have to request some money from you. Some small percentage from your trading account. The amount self that let's say you deposit $100. The broker will request percentage of your that $100 for you to able to use their leverage to gain much more money in return. That's why I give an example like car. If you are going to rent a car, they will ask you some money before. You get it?
Okay.
Yeah. So that's how it is.
Okay, so it means the leverage is not compulsory. You decide to go for it.
The leverage self, if you don't have, let's say if you have, everybody needs leverage, but we use leverage different. I myself, if I want to, trade and double my account, I want to go for high leverage because I have to double my account, so I have to go for high percentage leverage. You get it? So if you want conservative, you can go for low leverage. You get it? Because when you go for low leverage, the use margin will be more high. They will request much of money because the market, you need high amount of money before you can trade the market. Okay, that's why the broker is giving you that leverage. So when the times that leverage to your amount of money, you get enough money for you to trade, to enter a lot size that you can trade. You get it? So let's say someone using 50:1 leverage, the person can maybe place 0.01 lot or micro lot, only one position, and can never open 2 positions because they will not allow, because the money is very small or the leverage is small. But someone who is having just $100 can open one lot size because the person has choose high leverage. So you see the person trading $100, but the person has traded $100 to huge amount of money is because of the leverage.
Okay.
Yes, it's because of the leverage that the person is having. That's why the person is able to, trade that amount of money to huge amount of money. Because if you choose small leverage, your loss size is going to be small, which you will not get much money. So that's how. So if you want to protect your account, someone will use small leverage. But as for we that we trade small account for a living, or we trade small accounts, we have to at least go for high leverage. You get it? I got my first 100,000 Ghana cedis because of leverage. Because the lot size that I enter one lot size, I think 3 lot size with small amount of money. If I choose small leverage, I'll be able to trade that amount of money to that amount of you get it? So the leverage, people use leverage anyhow. Like, you have to know the reason why you are using. Sometimes you have some amount of money there, you are just going to risk that money just like that. You can use that huge leverage. And someone me like I myself, I use high leverage, but it doesn't necessarily mean I'm going to use high lot size to grow my account. No, I still use small account, small lot size. In terms of, I'd rather scale in small. As we are coming, we will know what scaling is. You get it? Yes.
Yeah.
So that's how. Sometimes you will enter position and then you saw that, wow, this position is 100% is going in your direction. You can't just watch the market. You have to lock in. You have to take opportunity on that, and then go for high lot size so that you can make money. You get it?
Yeah.
Yes, so that's how it is.
Okay. So if I should get you right, it means when you deposit money into your account, it doesn't mean you are going to use your main amount. You have to
No.
set your leverage one.
You said when you choose your leverage, the higher the leverage that you choose, the lower your
The more.
percentage the margin that they will request. You get it? Because you've requested high amount of money from their this thing. So they will you have small amount of money. So they will times that money that you've requested. Yes. So and then they will add it. When you are not coming, we said we were talking about the first this thing, the recording was the lot size, the standard lot, the unit. You have the 100 units and 10,000 units. We have 1,000 units. So when you watch that one, you understand.
Okay. Okay, I get it now.
Okay. So we understand the margin level. So the margin level is the equity divided by the margin used. Okay, this one. Let me give an example. Okay, let's say okay, let's say you have an account. I'm coming in. Are you guys on point?
Yeah.
You guys understand everything I'm saying?
Yeah, I understand.
Yeah. Okay. So let's say you have account. Okay. Let's say you have account. Okay. Let's say you have your equity. Let's say your equity is 5. Then you have margin. They've requested, I mean, you understand the margin. So they've requested $1,000 from your account. Okay.
Okay. Yeah.
So in order for you to know the level percentage of your distance, your account, your healthy of your account, either you are in down or your account is going to grow or something like that, you have to calculate your equity with this. Okay, so let's say you're going to 5,000 divided by $1,000 times 100. You get it? Let's see.
Yeah.
Margin level. Times times 100. Then you get, some people are mathematicians here, or Gabriel and Charles. Okay, so you see that this is the percentage level when your account is intact, like everything is intact. So when this is reducing, let's say now your account has reduced to 400%. That means you are in a loss. You get it? That means you are in a loss. You can't just enter a trade just like that, or you can't enter loss size. You get it? You have to, add small, or you have to enter small loss size. In order, you can't enter the same loss size that you used to enter the first trade. So when the percentage is increasing, that determines your healthier of your account. Either you can add more position or you can't. So when it's going up, that means you are in profit. So you can add another position, which they will demand another use margin, like another amount of money from your account, because you've used different amounts of you've used enter another position. You get it? So that's how the margin level is. That's how it is. You guys, I don't understand. Do you understand?
Yeah, I understand.
Okay. I like that. I like the way we are going fast. So now we are going to start with the take profits. So now you know take profits.
Yes, please.
I think there's one thing here. Okay, let me give you, if you understand. Okay.
It's okay for them.
It's Oh, okay. So let me ask you a question. When you have 100%, when you have 100% of margin level, when you have 100% of 100% of margin level, what will be your free margin? What will be your free margin? What will be your free margin?
If I get my next question, I'll do
Is it?
my next question, I'll do it.
Is it? So okay, basically when the margin level is 100%, okay, that means your account, like your equity is equal to your account. I don't know, your use margin. Okay, let's say your equity. Okay, your equity, and then the margin that they requested, they use what? The amount of money, like the way this one, the percentage is reducing, has come to the level of 100%. Now, because every amount of money is up by, when you are making money, it will go up. And so when your equity is equal to your margin, that means your margin level is going to be the 100%. That means you don't have free margin. your entire amount of money, you can't even enter another trade because you get it.
Okay.
Yes. So let's say it has reduced to 90%. That means your account is growing. You get it?
Yeah.
That's how it is. So if I ask that question, that's how it is. So most of the time, most of the time the this thing, the margin call will come 50% or 30% time level. You get it? When it's reduced to maybe 30% or 50%, that's where the margin call will come in.
Okay.
Yes. So so you guys understand. This thing is very, very important. It's very, very important. Yes. Because when you are watching the charts, you see, let's say you are growing your account, you know that, oh, my margin is going down, so you close it early. You get it? If you are looking at this thing, the amount of money it really is, maybe you will not even do anything. Yes, but when you look at these things, it's very, very, and trust me, most of the people don't know anything about these things because these are the basics ones. Yeah, these are the basics ones. So that's why you see someone will teach in the YouTube, and then we said come for the course or come for main mentorship because there's something more than that. You get it? Because it's not just about drawing. If it's easier, everybody will do it. That's how it is.